Good morning, good afternoon, everyone. It's my privilege to welcome you to another webinar with Talent Alpha. My name is Przemek Berendt. I'm the CEO and one of the co-founders of Talent Alpha. Happy to see the participants of the Talent Alpha network on the line. Today we have a very exciting session ahead of us where we'll be talking about building actually a valuable software business. So most of you are software services companies, but we know for a fact that many of you are trying to build products that you're trying to take to the market. And today we have a very unique opportunity to speak to two of our friends who we've met along our own Talent Alpha journeys when we were looking for VC investors around the globe. So it's my privilege to introduce to you Flynn and Bogy Skowronski from FounderPartners, and I'll let them to introduce themselves in a minute. I met Brian personally this spring, I would say just before the COVID locked down the entire world. We met in the yacht club of Silicon Valley, where we spoke about their fascinating business model and how they're helping companies to grow big. And I've known Bogy for many, many years throughout her ventures within the MIT CE Forum and the Tech Accelerator she's been running out of Poland, but also through the Harvard Club of Poland. It's my privilege to welcome you to this session. Over to you for more broad introductions. I think we'll start with you, Brian.
Thank you, Przemek, Tim, and the whole Talent Alpha team. We really appreciate and are so grateful for you guys to give us this opportunity to chat with your audience. We love entrepreneurs. We love to inspire them because entrepreneurship creates jobs and wealth and so many wonderful things. Just a little bit about myself. If in one sentence, I think of myself as a former Wall Street banker who turned serial entrepreneur. I kind of almost learned how to sell a business and raise capital for business before I learned how to build a business. I spent 7 years on Wall Street in New York and London with Morgan Stanley, and then with Robbie Stevens out here in Silicon Valley. And then I was inspired by my own client base to become an entrepreneur. And so that's what I did. It's been a 21-year journey. Lots of ups and downs. I've been involved in well over 20 companies, and half of them have exited, and across a bunch of different areas within software. I can get into more details about that later. And then started this firm called FounderPartners, where we do two things. We help entrepreneurs build their businesses and sell their businesses. In that journey, I was so fortunate to meet Bogy, because a lot of the entrepreneurs and aspiring entrepreneurs that we work with at FounderPartners actually come from the CEE region. So I've been working with Bogy now for getting close to 2 years, and it's so great to have some boots on the ground out there, and for being a conduit to meet you, Przemek, and the Talent Alpha team. Bogy?
So my name is Bogusława, short Bogy Skowronski, and I have switched in my career between kind of three broad professions: corporate, banking, and also being an entrepreneur. And in 3 different countries, the US, Switzerland, and Poland. My first company I built up in the US, and we sold it to a stock NASDAQ listed telecom entity. And then following this, I worked for large organizations such as UBS and EBRD. EBRD, it was kind of a startup when I first joined, and then moved to Poland, organized a whole bunch of different companies in Poland, the last one being MITEF, the Tech Accelerator, and about 2 years ago met Brian and was just completely taken by the concept of FounderPartners. So very happy to be here today, and we can hit it off. But I cannot move. Tim, are you trying to move my screen?
Just a bit of logistics while you're moving to the next slide.
Okay, great.
There is a Q&A section in the box within the Zoom app. So if you have questions to our panelists, feel free to type it in. We'll be having a Q&A section at the end of this presentation. I also will be trying to jump in with some supportive questions as we go along. Over to you, Bogy.
Just a second, because I'm showing you. Okay. Sorry, it's moving too fast. I'm trying to go back and it doesn't. Okay, here it is. Okay, sorry. Okay, so in today's session, we have organized our thinking into 3 different themes. And in the first theme, we want very much to focus on the aspect of ideation, of how to actually think about selecting a particular area to focus your energies. So, you know, the ideation and scaling are 2 very distinct phases. And ideation is super important because if you don't do this work properly at the very start, you may end up working on something that has less value ultimately than something else would have. So here, FounderPartners has enormous experience in thinking through many years and observing entrepreneurs and founders who have done it and executed very well. And we would like to share with you kind of our concept of our conclusions on how to think about this ideation phase. I understand many of you are very successful software houses, basically running service businesses, but we very often hear that many of you would love to actually develop a product, a product-driven software business. Probably many of you have been doing it already. And we want to share with you how we are thinking about it, not only the ideation part, but also forming a partnership with FounderPartners, ultimately how we are structuring and how we are operating in the market. So Brian, why don't you take off and talk about the building a valuable software business? What are the key characteristics?
Sure, and Bogy, since you're at the control, I'll just kind of say next slide, or we'll just kind of go back and forth. So maybe the next slide. I just want to pick up on where Bogy was on, it's really kind of the objectives. You know, Bogy's absolutely right. A lot of entrepreneurs, they're trying to figure out how to build a product that can truly scale, but it starts with ideation, right? And you know, I've been in this investment and company building business for 20 years, and I was actually in college a philosophy major. So I always think of myself as like a student of industry, a student of frameworks, things that have been time tested. I've also been mentored by many other very successful entrepreneurs, and we've come up with a number of different key points to, I call it a time-tested framework that can help any entrepreneur become successful. So the first thing we say is, you gotta look deep into the entrepreneur's soul and skill set. We always believe that founders are, you know, at least 90% of the success equation here. I always say that I would bet on an A+ founder in an F market, like a terrible market, any day over an entrepreneur who's really not so great, maybe a C, but happens to be catching the wind of an A++ market. And why do I say that? I say that because founders that are so strong, that have the skills that we're going to talk about, are able to circumvent or jump way ahead of the B or C entrepreneur. And so when you think about entrepreneurs, look inside yourself. And do you have these kinds of key, we call it characteristics? The first is determination or grit. The journey is not a sprint, it's a marathon with lots of up and downs. I'm sure even Przemek and a bunch of others would say the same thing. There are great days and there are terrible, terrible days, but you gotta get through them, and you gotta stay focused and be doggedly determined and not get distracted. Second part I'd say is humility. Any entrepreneur that has hubris or arrogance, it basically impedes their ability to learn. Humility is such a core aspect of the curious journey, the curious people that want to learn from others and that are asking great questions to seek truth. Third thing I'd say is just being self-aware. Any great entrepreneur should know what they're inherently really good at versus not good at. You know, in my journey, even of building FounderPartners more recently, 7 years ago, I realized 10 years ago, there are 3 things that I'm terrible at. I'm not an engineer like all you guys, right? I was a philosophy major. I'm pretty good at product, but I'm not good enough at product, I think. And I'm an operator. I know how to get a company to probably the first 5 to 7 million in revenues. And I've built businesses much bigger, but I'm not the time-tested operator. I need to move more into a strategy role. And I think that that's really important to surround yourself. Like, I've surrounded myself with people that actually have the skills that I don't have. And that's helped me become much more successful. Integrity is critical. It takes forever, as we all know, to build up your reputation. And that should be based on integrity and truth and honesty. Being open, being data-driven, seeking the truth through transparency versus kind of skipping over things. Being flexible, listening really well, and being really scrappy are all key characteristics. Now, an entrepreneur may not have absolutely every single one of these things, but they can also learn to have a lot of these things in the journey. I think great leaders should always be learning and should always be changing. And so anyway, I throw these out because these are the characteristics we see time and time again across the really successful entrepreneurs that have created a lot of wealth versus those that actually haven't. Bogy, is there any?
No, I think this is great. And, some of these, I think like the bar may seem so high, especially when I look on all these photos to the right, all the people that have achieved so much. But I think, many of us have everything that is written on the left. For me, like when I think of, Przemek actually, that we see here, or Stefan Batory, these are the typical people that I think have all the things that Brian here talks about.
Exactly. I think a second aspect.
Thank you.
Yeah, you can pay Bogy later, Przemek. Anyway, I think the second part to a framework here we look at is the product has to be compelling. And we think of it on a spectrum of nice to have versus way on the other side, mission critical. Nice to have products just don't work, especially during COVID-19 or recessionary type of environments. What we're looking for is closer to the far right, closer to mission critical, but not mission critical. Mission critical products, in our experience, tend to be companies that get acquired right away. They're very difficult to sell, to sell and get customers that are paying repeatably for product or service. And the reason why is that mission critical functionality oftentimes just has to be built within a company. And so it's a build or buy. So it's key to be close to the right where there's an urgent need to pay. And the other way to look at it too is what is the value? Can you measure that value in terms of, an increased amount of revenues through efficiencies or profits? We look for products that are actually used all the time. There's a direct correlation between usage of a product and stickiness of a product and willingness of a company to pay. So again, we don't like companies that have nice to have products, but things where there's an urgent need to pay. Bogy, you want to take it over to the next slide?
Okay, oops, sorry. Okay.
We also believe it's important to be in a market that's not too niche, but also not necessarily not way too large. We look for markets and I encourage others to look for markets that are probably 5 billion or so in total available market size. And the reason why is that for every point of market share, you can generate a $50 million a year business. So if you scale that back to obviously $1 billion market, that could be a $10 million a year business. And that can actually be great too. But the reason why we want to go after sufficiently large markets, or you guys should be thinking about that as entrepreneurs, is that building a business that's in a niche market versus a large market can be just as hard, if not more difficult. So why not pick a bigger market, right? What are some other attributes within a market that's actually attractive? Markets that are highly fragmented. I think Przemek, Bogy, and myself, we all went to Harvard Business School and took a class called Competition and Strategy. And there's this thing called The Five Forces by Michael Porter. If you look at markets that have got too much supplier concentration or too much customer concentration, like, so for example, building an app off of Facebook, well, that's a pretty risky proposition. So why not build a product where there are tens, if not hundreds of thousands of potential customers, whether those are developers or actually small B2B customers, and a market that's actually greenfield, meaning that there's not a ton of competition, but the market's crossing the chasm, meaning the market is just starting to get ripe so that you can get the timing right. I'll give you an example. One of our companies that's in our portfolio called Clean Shelf did just this. Clean Shelf is a system of record for SaaS spend, and the founder came out of Slovenia. And what we realized is that over a period of time, SaaS has been growing so fast that 30% of SaaS is actually wasted spend, and it's distributed throughout an organization. What's great about Clean Shelf is that the timing of the company was right. The company's going through explosive growth right now, and there are all sorts of customers for it, not just SMBs, but large enterprises. We just closed a big transaction with Novartis just the other day, but we've also got lots of little companies that have been paying for it. So anyway, we'll get into more examples later. Bogy, let's talk about the fourth part to the framework.
Sorry guys, it's not okay. Great.
So the fourth aspect to building a successful business is the attractiveness of the financial model. So let's start with the revenue stream first, or the sales stream. Getting high quality revenues basically means having revenues that are recurring in nature, that are repeatable. So if you can sell to a customer with your product a 3-year contract and they're paying it all up front, God, you're just like one of the luckiest entrepreneurs out there, right? But SaaS businesses in particular can be fantastic, right? Especially sticky SaaS businesses. We own a company called Identalsoft, which is cloud workflow for the highly fragmented dental market in the United States. And what's great about Identalsoft is it's a practice management software where you have dentists working on the software, you've got people at the front end part working on the software, and hygienists. And so it's super sticky. So once that software is sold, it stays into that practice and it doesn't get ripped out for years and years and years. And so those kinds of recurring revenue businesses are going to get traded really high multiples versus those that are just kind of last for only 2 or 3 months that have got leaky buckets. We also look for businesses that have got high gross margins. After the cost of goods sold, maybe 80-90% gross margins could be great. And why is that important? That's important because after your gross margin, you've got more money per dollar. So in other words, let's say you've got, it's $100 for a typical product that's being sold on a unit economic basis. It takes $10 to deliver that, and you got $90 left. That means you've got $90 of which to spend on R&D, to stay ahead of the competition, to continue to innovate, right? You've got more money to spend on sales and marketing, and that gives operating leverage. And last but not least, businesses that are capital efficient. So this means, there's low customer acquisition costs, lots of search engine marketing, customers that are rabid. We like products, for example, that are sold within the development community. Think about Atlassian. You guys know, a lot of you guys use Atlassian, right? Atlassian was a company that had absolutely zero sales force, came up out of nowhere in Australia and grew into a massive business and finally ended up taking on capital and going public. But Atlassian's also a product that's self-serve, right? Quick implementation, very low people costs. So these are attributes of a model. When you think about building your business, how can you actually inject those aspects into your business? Maybe let's go to the last characteristics. So ultimately, and these are classic business school kinds of things, you want to build a moat around your business. How can you build a defensible, sustainable business? Well, there's lots of different things that we've seen years and years looking at businesses. One is brands. Brands, people remember brands and they're willing to pay for brands, right? They're willing to pay a premium for them. Businesses that have a network effect, right? So, take, for example, LinkedIn. The more people that join LinkedIn, right, the harder it is to walk away from LinkedIn and go to a substitute product. The old adage of outstanding or excellent customer service, that's still important. Outstanding customer service, meaning being responsive, understanding your customer, creates switching costs, so customers aren't going to leave. And then there are all sorts of other unfair advantages. One of the beautiful things about a lot of the companies that we've worked with in the CEE, SEE region is you have an unfair structural low-cost advantage. Out here in the Bay Area, salaries for developers are so off the charts, and there's very little loyalty. I know I'm being a little bit harsh, but that's a wonderful thing to come from where you are, where you don't have to spend necessarily as much. That gives you a lot more financial flexibility to spend in the sales and marketing and other things. Bogy, any kind of comments that you have on this framework?
I think these are kind of the 5 things that we always look at when we meet new businesses. And I think it's a helpful framework for you to kind of consider when you're thinking of building a product. And I must say that it never happens that a company would have, everything done perfectly on all 5 counts. When we start getting involved, we strategize a lot and try to bring positive changes to really kind of get as close as possible to this ideal that Brian just described.
I have a question on this framework. So most of our guests on the webinar today, they are services companies, right? So they work on the works of ideas of others, but very often, and we've seen it a lot, both with small and medium and very large organizations, they come across a number of areas or opportunities that they think they could build a product around. What would be your advice, kind of way to go about it? If you spot an opportunity like that, do you take a team and you kind of separate it from the services part of the organization so they can run after this idea fully? Or should they do it like, after hours when they have some spare capacity? Do you have any best practices around that?
That's a great question, Przemek. There's so many different ways to deal with that. So I think it's all, if an entrepreneur or a developer, whoever it is within an organization spots an opportunity, the first thing is you got to validate that opportunity. And whether you're moonlighting to do that or doing it as part of the own organization, that's something that you'd have to figure out. Here in the US, there's actually potentially even laws about that, right? You got to be careful if you're planning to spin out and start your own company doing that. But that's a separate topic. To the core issue, this all comes down to market validation. And market validation is there truly, using this framework will actually really help, right? Go talk to 30 potential customers and do customer discovery work. Who really are those customers? Will they actually pay for it, or is it a nice to have? How much would they pay for it? How would you acquire it? What are the product marketing messages around it? What is the total available market size? Do you see how these questions I'm asking fit into the framework of these 5 different pieces? So you can start figuring out, hey, this may actually work. Now, whether you want to bootstrap it on the side until you get more proof points and you get the product up and running and you start getting your first few customers, again, that's a slightly different topic. So I guess one of the other questions too, Przemek, is, it's ideation. Ideation can come from, just spotting something in the market to looking and, maybe you're running an organization and you're realizing you've got a tool within your organization that's so great that it could actually be sold to other development shops. Or you have a customer that's that is asking you to develop a tool for them, but you think you can, and you do that and you deliver that, but you actually think that you can build an even better tool and sell it for a lot better. So we have a lot of ideas actually towards the back end part of the presentation to conjure ways through ideation.
I think ultimately you need to dedicate resources and probably spun off this new activity, product-driven activity. But until that point, I think you have to be very entrepreneurial, figuring out what is your situation. And software houses are in a great spot, really, because there is a recurring revenue that you can dedicate always some time to thinking about the product. So in the transition phase, I think be as entrepreneurial as you can.
And you also mentioned a margin that it should be like a 90% plus. Can you help the crowd to understand how to calculate that margin, right? It's easy on the services side. We just add a percentage to whatever the base cost is. How do you do that for a software product?
Yeah, so usually the gross margin for a software product. So let's take, for example, a workflow software, or maybe an API services product. It's usually the cost of goods sold is the AWS spend. It's the hosting cost. It's that simple. That's separate than customer acquisition, right? That's sales and marketing. Now, there are also, people can call things like digital media, e-commerce kinds of companies, and we own some of those as well, right? And those happen to have much lower gross margins, maybe in the 30 to 50% gross margins. Those are also can be great businesses. It's just that they have to scale more to get essentially the same gross profit as something that's like a SaaS business or an API services business.
Okay, the second theme that we want to cover today is once you have tested your product and you have achieved the product market fit, we want to share with you how we work with tech entrepreneurs and what is the model that we follow. Before that point, we will be happy to talk to you, of course, as well, and you will show in a second, the format in which we could interact, but we get heavily involved once this product market fit is actually proven. So here are some examples.
Yeah, I mean, I guess what we, just to kind of iterate, Bogy, and then we'll take you through two examples. We look for companies ideally that have some traction. And these can be global businesses, and they may even have the pricing wrong. That's okay, but they've got usage and they've got some revenue stream, which basically is an indicator of a customer that's actually willing to pay, and they're willing to pay repeatedly. Sometimes these companies can actually be much further along, not just that early stage. And so we join as, the idea behind FounderPartners is, we build businesses and we sell businesses. And on the building side of the business, we have a group of very successful serial entrepreneurs that have been there, done that many, many times. They don't ever have to work again, but they love to get back into the game. And it's kind of a spirit of kind of mentorship to super accelerate and increase the probability of success for those technical entrepreneurs that are maybe first time or second time entrepreneurs, increase that probability of success, right? For example, if they want to come to the US market, we are the local boots on the ground. We got the credibility to do that. And we have a track record of doing this for so many years and so many companies that we think that we've got a way to keep that high success rate. As we all know, starting a business is kind of scary, right? I mean, the data suggests that it's basically a 10% success rate. But because of our approach, we're highly concentrated. We've been doing this for a long time. We've been sharing best practices. We actually have a pretty high success rate. And we join these companies as minority co-founders and dedicate our time towards all aspects of building. So let's look at a couple of examples. The first one, I can't remember if that's Clean Shelf, which I talked to you about before. So it was founded about 6 years ago by a very successful, well, actually very talented technical founder. He worked at a venture-backed firm called Zamanta, which was supposed to have been like a unicorn in the SEE region, backed by Union Square. He was VP of product and VP of engineering at that company. And he was trying to solve this early problem of SaaS spend, even at his last company, that's where he discovered the problem. And he realized, well, shoot, there's no solution out there. He started out on Excel spreadsheets, and then he realized, wow, maybe there's a better way of creating a system of record for all SaaS spend so that CFOs and eventually CIOs and CEOs could discover, control, and optimize that spend. I discovered the company, 2 years into that journey, when the company had 5 paying customers, and it was really small. I think Dushan was charging only about $20 a month per companies or per customer. And I thought, wow, this could be a huge opportunity because there are millions of dollars spent by enterprises, especially cloud native companies, that and based on the research that Dushan had done, he was way underpricing his product. So Dushan wanted to come to the US. We helped him set up legal and a whole sales and marketing engine. We did a lot of discovery work, changed go-to-market, the product messaging, and ultimately the pricing. So we took that $20 per month to, on average, about $2,000 to $3,000 a month, just through doing discovery work. And that company, and we put in $1 million, and that company has grown from the $3,000 ARR to over almost $1.5 million now in 3.5 years. We've had a lot of inbound M&A. And then more recently, we helped the company raise some institutional capital at over a $20 million valuation. And I think that Clean Shelf is going to be a very big business. And I'm so proud of watching Dushan, and we've been kind of, his minority co-founder, watching him grow as a founder and de-risk this business and helping him achieve his dreams. So the second company is one called...
Brian, let me just add here that the whole team stayed in Slovenia, the whole technical team. There is a very small team in the US. So it kind of optically, it looks that the company, is fully American, but there is, the whole operation is, stayed behind in Slovenia. And very effectively and efficiently could work with FounderPartners to really get the sales engine going.
Yeah, and actually I want to just make one important theme I forgot. The reason why a lot of these global businesses want to come to the US are the following. One is the US is a really large market, right? So it's important to have some presence out here. Number two, and perhaps the most important thing, that most entrepreneurs want to have an exit at some point in time. And 90% of these tech acquirers are here in the Valley. And 95% of exits are actually M&A. It's not going public, right? We read a lot about unicorns and all this stuff, but the reality is there's a lot more smaller businesses that are just getting acquired by strategics. And so we encourage founders, and they can come from anywhere around the world, having a presence here in the United States so they look and feel like an American company. They're much more likely to get acquired if they look and feel like an American company, from legal to business, than if they look like something on the other side of the world. So back to Advent. Advent is an event management CRM company, has everything from APIs to SaaS. And the founder, Michael, wonderful person, actually ran a dev shop, just like many of you folks, right? He was running his dev shop. That actually paid his bills, helped him raise his kid and his wife. And he was out in Copenhagen. He saw that there was this problem out there. There was no calendar solution in the market. And so one day he decided to start building it, moonlighting it and building it. And it got lots of traction. When I met Michael, he was on 30,000 widgets around the world with no monetization engine. And I thought, wow. And it was growing virally all through SEO. And I thought, wow, this is really cool. So I convinced him to move to the US. We put in a pricing engine, and the business is super profitable in only 2 years, only has 3 employees. We just hired our 4th just this last week. We acquired a Russian competitor, and we continue to grow this business, and it's launching its second product called Appointment Thing, which will compete with Calendly, all part of the CRM event space. So anyway, another example of the things that we do at FounderPartners.
Right, and I think in total, you have built approximately, as FounderPartners, 30 companies, right, Brian? So yes. The portfolio is quite large, and we're looking always for more interesting products to be engaged in. And here, engaging with FounderPartners. So in a moment, we'll have a chance to go Q&A, but maybe the last point here is that, here are our details, Brian and me, Bogy. So if you have ideas that you would like to discuss, share, please just shoot them to us. Here is the form in the presentation. I'm sure you'll get it after so it would be good to kind of get a broad description along these lines so we can follow and understand and maybe have a good basis for discussion when we speak. And before we hand it off to questions and answers, we wanted to share with you also some ideas, what we see one could build, what we see would be really effective in the marketplace. Would love your opinion on this. But maybe, Brian, why don't we go one by one?
Yeah, for sure. I think the first bullet point kind of should spur back to Przemek's question. Where do you really look? And so these are some good questions to start asking yourself. One would be, what are some of the top SaaS tools or APIs that you're using every day in your shop, outside your shop? And think about those, because those are, is there anything wrong with them? Meaning, is there some features or functionality missing? Is the experience clunky? Could you make it better? Could you strip off a lot of that debt, that technical debt? Other questions you could be asking yourself, have you built anything for your own shop, your own place that you believe, or just at whatever you're doing, that you think that there's a bunch of other developers or other businesses that could probably use it? And the reason why I'm talking about using it, I mean, it's great if you can have it every day, because that means you're going to create something potentially that's very sticky, extremely capital efficient, where you don't have to raise a bunch of money, and it's a much lower risk type of product that can be built. So these are questions to really be asking yourself to at least start the brainstorming. The second thing is, I guess the next few bullet points are just examples of companies that we've come across over the last, year or so that we thought were really interesting. The first one is a company I ran into, gosh, I really wish I was on the cap table of it, in Vienna, called API Layer. And what I learned from API Layer, if you go to their website, I won't try and ask Bogy to do this from here, but it's apilayer.com. What I learned from that company is they're a portfolio of both SaaS products and API products. And on the SaaS front, and this is a super profitable little business. Actually, it's not even little anymore. It's growing very fast. But it's a concentrated business. It doesn't have a lot of people. It's very profitable, and no outside shareholders. What they did on the SaaS front is they saw a lot of big SaaS companies like EchoSign, for example, that was bought by Adobe, in the invoicing space. And their theme was, these big SaaS businesses have too much features and functionality. They're pricing way too high. So can we create SaaS products that are much more lightweight, lower cost, beautifully designed products that can be sold ultimately to the same customer base? And so that's why they've got 5 SaaS products. One of them, I can't recall the name of it, but a lot of people already know about it, and it's growing very fast. They also have a bunch of APIs in different segments, from verification, conversions, lookup, and they have a whole method to their madness in terms of go-to-market. And I was really intrigued, and I was thinking, gosh, that's kind of the way of the future. For the next 3 to 5 years, I could see APIs being really large, a big opportunity, as well as lightweight SaaS products. If you look at the third bullet point, there's all sorts of tools for marketers. One of them that I actually had in the back of my mind, in fact, if one of you guys can build this product, please call us ASAP. I think that it would be really interesting to have an alert service for any B2B product. So think of it. Let's say you made a widget and it solves XYZ problems, and you know that there are all sorts of questions around the XYZ problems. And if there's software that can pick up these questions around the web in real time in communities like Quora or GitHub or long tail communities, and create an alert to a founder that, boom, this question was asked, that's a hot lead, right? And then that goes straight to the marketing and sales department, and the marketing people can go right after them and find out. Bogy, I'm trying to look at there. Whoops. I don't know why it's bouncing around. Okay. Another examples of other companies that are really interesting, that are growing fast. I came across a company called WebPusher, growing super fast versus their competitor OneSignal that raised $30 million is huge. But what WebPusher's hasn't raised any money and is eating the lunch of OneSignal, which is only like 6 years old. So web push notifications, pretty interesting, lightweight, sticky products. Customer onboarding software is an interesting category. What's great about customer onboarding software is if you do it in a really lightweight way, it's a great value proposition to other companies that are selling software. You want customers to be able to self-serve. And if they can self-serve and learn and train, then they're going to be really sticky, and that really improves the unit economics of that business. There are all sorts of, last group is there's all sorts of services for developers, from monitoring websites for downtime. Come across a lot of companies like that. And these tend to be really small dividend paying businesses. There's nothing wrong with owning a business that's doing $1 million to $5 million in revenue and throwing off, 50% EBITDA margins and paying dividends. Those are great businesses, really sticky. To companies that do, aspects of what Atlassian or GitHub offer, like retrospectives. We came across a company called Retro in Denmark that's growing. I think they've got something like 160,000 developers, growing like a rocket ship. So anyway, these are just different ideas. It doesn't mean that they're the best ideas, but it's just to get ideation and just idea flowing going. And we would love to chat with any of you guys if you think you've got some product market fit, and we'd love to help you.
Okay, perfect. So let's leave some time for questions.
Yes, thank you, Brian. Thank you, Bogy. Dear all, the channel is open for questions and answers. If you have any, just type them into the Q&A box or raise your hand, we'll unmute you. And while you do that, I'll ask a generic question. So how does this work? So say I'm a software house and we've been working on the side on this little product that we think it has some potential. We send you guys an email, and then what happens next?
Bogy?
Okay, so we'll set up a call quickly after we hear from you and basically discuss a brainstorm and figure out exactly at which stage the product is and plan the next steps. If we decide, okay, jointly that this is a good idea and we should develop it to a global company, we formulate a Delaware C. You become the majority shareholder, we become minority shareholder, we put our capital behind it, you may want to invest as well, and we basically develop a plan to really roll it out and build a successful business out of it.
Excellent. So just to paraphrase it, so which I think is extremely valuable from the founder's perspective. So not only you help kind of with all of the legalities to establish the business in the US, which for many people in our side of the world is a challenge. You need to pay a lot of lawyer fees to get this done properly. But more importantly, then you invest the capital and you bring some of your people to actually help the team grow the business, right?
Absolutely. Yeah. To do the customer discovery, to really figure out what does the ideal product look like for the US market, for which segment of the market, how to price it, all the things that Brian described that they did, FounderPartners did on Clean Shelf and Event as an example.
Yeah, and I think I'd just add to it, we kind of give you the helping hand. Been there, done that. And we have a practice at FounderPartners where we put up to 2 very experienced serial entrepreneurs on a project. We have a primary builder and a secondary builder, and we meet every week with the founder. And we go through, everything from product development, marketing, sales, customer acquisition, budget, KPIs, recruiting, financing, and help that founder think through what are the priorities for the week, what needs to be done, what doesn't need to be done. And then we go off and we do work and help those founders, like a partner, like a true partner, right? But in a minority way. So we're going to work on a few companies per partner, not on that many. we only invest our own money. We don't invest other people's money like a venture firm. So that means we're much, much more aligned. We're really flexible. We're not forced to have to sell a business. We can work with the founder. It's just that I think it's a really healthy way to work. And then once a month, that founder and that company that's on the Founder Partner platform reports monthly into the entire partnership at FounderPartners. They can draw on all the knowledge and expertise of all the partners. And so that actually helps de-risk the business further and helps them accelerate revenue growth.
How many are you on the partnership?
We have 8 people, and we're growing. And my vision for FounderPartners is I think this is just a better way. I built FounderPartners with my co-founder, Greg, with the idea that I wished a firm like FounderPartners existed when I did my very first company in 1999, which was an identical copy of Quora, 12 years before Quora even started. If I had had that kind of help, I think I could have been a more successful entrepreneur. It's not right for everybody, but anyway, so we're growing, and we hope to have lots of great deal flow from all different regions, even through Talent Alpha.
I was just going to say, I wish we met like in the beginning of 2018.
Before your VC, right?
It's never too late, Przemek. Never too late.
Excellent. All right. I don't see any questions coming up from the participants, but many of you have stayed with us until the very end. So any final thoughts from your side, Bogy, Brian?
No, we would love to hear from you. We would love to get some feedback, whether it was helpful and, what other aspects you would like to consider for the future seminars. I appreciate very much the opportunity, Przemek, to be part of this. And I really admire all the things that you're doing as far as kind of skills building, experience building of all your clients and participants. So very glad to be able to contribute in small way to it today.
Thank you.
Yeah, I would echo everything that Bogy said. And then just to all you guys that are either entrepreneurs right now or aspiring entrepreneurs, follow your heart. This is a journey and you just got to be authentic to who you are. And taking risk is a great thing. And it's not a big jump. There's lots of ways to do it. And life is too short to not have any of those regrets, especially when it comes to entrepreneurship.
And I think that's a great final thought. So thank you very much for your presentations. Our dear Talent Alpha Network, feel free to reach out to FounderPartners. They are great partners on the journey. They've been helping us along as well. And we are looking forward to the next seminar and webinar with you. Have a good day. Thank you.
Thank you.
Bye-bye. Bye-bye, everybody.